Hello guys, I am Tejasvini and my topic is NPA in India and its impact on the Indian economy. The Reserve Bank of India explains the definition of NPA as an asset becomes non-performing when it stops to generate income for the bank. According to the Reserve Bank of India, the gross non-performing assets in Indian banks, especially in the private sector banks, is valued at around 400,000 crore, which represents 90% of the total NPA in India, with private sector banks accounting for the remainder. Reasons for rise in NPA levels. From 2005 to 2009, the commercial credit doubled. It was a period in which the world economy as well as the Indian economy were booming. Indian firms borrowed furiously in order to avail the growth opportunities they saw coming. Most of the investment went into infrastructure and related areas like telecom, power, roads, aviation, and steel. From 2000 to 2008, the Indian economy was in a boom phase, and banks, especially in public sector banks, started lending extensively to companies. However, with the financial crisis in 8 to 9, the corporate profits decreased and the government banned mining project. The situation became serious with substantial delay in environmental permits affecting the infrastructure sectors and resulting in volatility in prices of raw materials and a shortage of supply. Another reason is the relaxed lending norms adopted by banks, especially by big corporate houses, foregoing analysis of their financials and their credit ratings. The recent developments and ways to tackle NPA. The first one is the debt recovery tribunals to decrease the time period required for settling the cases. The aim of DRTs was to receive claim application from banks and financial institutions against their defaulting borrowers using unclaimed deposits. Similar to provisions for unclaimed dividends, the government may also create a provision and transfer unclaimed deposits to its account. Monetization of assets held by banks. In this case, banks with retail franchisees should create value by auctioning a bank assurance association rather than running it themselves as an insurance company. Make cash reserve ratio attractive. At present, RBI asks Indian banks to maintain a certain limit on CRR on which the RBI doesn't pay any interest, and hence bank lose out on a lot on earning interest. If the CRR is made more financially rewarding for banks, it can reduce capital requirements. Next would be structural change and involvement of private capital. The compensation structure and accountability of banks create a problem for market. Banks should be governed by a board while aiming to reduce government stake and making the financial institutions attractive to private investors. Corporate debt restructuring. It is for reducing the burden of debts on the company by decreasing the rates paid and increasing the time the company has to pay the obligation bank. Credit risk management. This involves credit appraisal and monitoring accountability and credit by performing various analysis on profit and loss accounts. While conducting these analysis, banks should also do a sensitivity analysis and should build safeguards against external factors. Tightening credit monitoring. A proper and effective management information system needs to be implemented to monitor warnings. Amendments to bank law to give RBI more power. The present scenario allows the RBI just to conduct an inspection of a lender but doesn't give them the power to set up an oversight committee. With the amendment to the law, the RBI will be able to monitor large big accounts and create oversight committees. The next one would be accountability. Lower level executives are often made accountable today. However, major decisions are made by senior level executives. Hence, it becomes very important to make senior executives accountable if Indian banks are to tackle the problem of NPAs. With the potential solutions above, the problem of NPA in Indian banks can be effectively monitored and controlled, thus allowing the banks to achieve a clean balance sheet. Next, I would be talking about the impact of NPA on the Indian economy. NPA plays an important role in every economic condition and also main cause of the increase in the current account deficit. Interest rates, loan, housing finance, CRR are all directly affected by the system. By the corporates also affect the high impact of higher NPA. So, I would be listing out a few of the impacts. Stress in banking sector causes less money available to fund other projects, therefore negative impact on the larger national economy. Higher interest rates by bank to maintain the profit margin, redirecting funds from the good projects to the bad ones. As investments get stuck, it may also result in unemployment. Balance sheet syndrome of Indian characteristic, that is, both the banks and the corporate sector have stressed balance sheet and causes halting of investment-led development process. NPA's related cases add more pressure to already pending cases with the judiciary. And confidence in shareholders, higher NPA loses the confidence of shareholders. Effect on borrowers, high NPA not only affects the serious borrowers but also affect the borrowers with good credit scores. Thank you.